Hello and welcome to another video. In this video, I want to spend some time here on the daily chart time frame on the AVAX chart, just to show you how targets can be calculated from an Elliott wave point of view using the Fibonacci extension tool. So it's more of a video that helps you understand how to use that tool, because the structure on this chart is quite interesting from that perspective. It makes a great structure to apply this tool, and it should help you understand the overall targets. Yeah. So how to use this tool, it's the Fibonacci extension tool. So first of all, when we're analyzing a chart, like in this case, the AVAX time frame, daily time frame, the AVAX chart, and we have a potential 5-wave move up from a potentially significant swing low, like in this specific example, the April low this year. Then after a 5-wave move up, typically we'd like to see a 3-wave pullback. That happened. Okay, so now let's assume there's a potential that here on the 6th of June, 5th of June, 6th of June, a low formed. And we have an AB structure or a 1-2 setup. Then standard Fibonacci guidelines, at least the ones that I've developed over the years, they suggest that. And they are kind of not the same as you would find in the Elliott wave principle book, because that's like 25 years old or so. Not sure how old it is exactly, but it's kind of older than that even, I think. And so markets have evolved a little bit, yeah. And obviously at the time, that knowledge wasn't set in stone, so it's developed over the years. So we're not changing anything, we're simply refining it. I would still recommend everybody reads that book, Elliott wave principle. So you basically start down here at the beginning of the move, first click, and you click again at the top. And then you go with a third click to the low. And that gives you a range of Fibonacci extensions that are relevant. Now, what we normally say, and I would typically encourage everybody to have these activated on their Tradingview, the 100% extension, 123.6, 138%, 161.8 extension, the 178.6 extension, and the 200% extension, and so on. You see them here. And then we get a nice sequence of key levels. Now you might say, okay, how do I know which one it is? Well, there are certain ideal levels, ideal targets. So for example, in this specific example on the AVAX chart, I've got a potential 3-wave move up here in this blue wave 2. That's the bearish scenario, in which the market also should move higher in the yellow as well, in the yellow one. So both scenarios are aligned, which is great. In the yellow scenario, this next move up would be a 3rd wave. And typically a 3rd wave should move at least to the 138% Fibonacci extension or the 161.8. These are two ideal targets. 178.6, also still ideal. When we get to the 200% extension, it's starting to get extended, but it's not unusual in a 3rd wave. So normally I say my first milestone target for a 3rd wave is the 138% extension. So that's key. Then there should be a 4th wave, which we can add to the chart once the 3rd wave is topped. And the 5th wave would normally reach like round about 2 Fibonacci extensions higher than the 3rd wave. So you can't really say which one it is now, but if the 3rd wave gets to the 138% extension, then we talk about $42.28 for the 3rd wave. In the 5th wave, we should get to $48.84 or $55.07 then. Now, this is the yellow scenario. So to really trust the yellow scenario further, make the blue one less likely, we want to see the price get to the 138% extension at least. In the blue scenario, the 100% extension, the C-wave targets, 123.6, 138 and 161.8 extension levels are relevant. But in most cases, a C wave would reach the 100% extension, which means in the very short term, the first milestone target in this specific example, that's how I would normally go through my thought process, or that's what my thought process would take me to, that first ideal target is $33.60. Funny enough, that's kind of overlapping with the 61.8 retracement level then, which is based on resistances. So we have two levels there, good confluence. So that would naturally be the first key level I'd be watching. Of course, there are resistances along the way that any good technical analysis would, point out, like these previous swing highs. But really, from a wave point of view, as long as, and there's always a condition, the June low is holding, the 100% extension would therefore be the first ideal target. So that should give you a good overview of what the very common Fibonacci extension targets are. A specific example is here the AVAX chart and how to use the tool. Thanks so much. Bye-bye.